Hello, my name is Delton Chen. I'm making a final recording for the IIIEE Alumni Conference 2023 Weaving Solutions. So at the session where I spoke, I gave a presentation on part one and part two. I provided another presentation after the conference for part three. And this is the final segment where I'm just answering some questions again that were raised at the session. So I thought it might be handy for me to just go through all the questions again quickly and summarize my answers just to make it crystal clear. Some of the questions that were posed, I didn't get a chance to actually answer at the event. So the answers are embodied in part three and summarized again here. So let's have a look at the questions. So the first question that came from the audience is, how is economic decoupling from carbon enabled by the policy? That was explained in part three. The answer is that optimal growth offers a way of decoupling the economy by providing an incentive, the carbon reward, which transfers resources and energy from the mainstream economy into a new mitigation economy. As we do that, we can accelerate the rate of decarbonisation. Accelerate the transition to cleaner energy production in the consumptive economy, and we can increase the rate of carbon removal from the atmosphere. It's those two processes combined that could get us to net zero. The global carbon reward policy, though, it's not a standalone policy. It's presented in the classification table, also called the carbon pricing matrix. And the carbon pricing matrix as a concept is not deterministic. It's understood to be a probabilistic framework, and it works in combination with non-market policies. So that includes government regulations, laws, spending programs, and commitments of any kind. Then it also complements non-market efforts, including grassroots movements, net zero pledges, coalitions of banks, whatever grabs your fancy. All of these policies and initiatives work together to form a probability space, if you like. The point being is that the global carbon reward, the way I understand it, I think it has the capacity to shift the probability significantly towards a much more safe carbon budget. So the decoupling is provided through the transfer or reallocation of resources and capital from the mainstream consumptive economy into this new mitigation economy. And there's a feedback loop such that the authority for the policy is continually massaging and changing the reward value over time and the rules to achieve a sufficient rate of decarbonisation. The reason I think this has some plausibility is because these incentives that are called carbon rewards are carrots. They're a debt-free financial reward that can facilitate change, whereas taxes are sticks, and they tend to take resources away, which can have a desirable outcome, a positive outcome, but it threatens market actors with financial stress and lost profits. So the concept is that we need to combine carrots and sticks in a certain optimal balance to maximize cooperation. In other words, if we offer the reward over time, over years and decades, and actually in perpetuity forever, we can also adjust the taxes and regulations to help optimize the carrots and sticks to achieve a safe carbon budget over the long term. So that's the thinking, that's the theory of change. It's fundamentally different to green growth and degrowth because neither of those ideas brings to play another currency or a macroeconomic tool with a clear objective that connects back to neoclassical economics and also provides a clear optimization. So here we have a structured optimization, which is to manage risk via the risk cost to carbon and the systemic externality. And it's also backed by the interpretation of thermodynamic systems and, in effect, energy balance. How do we peak energy usage to have a successful clean energy transition? Optimal growth actually doesn't set out to cap energy consumption directly. This is something which may be a little bit difficult to understand at first. What it's doing is it's changing the way energy is used. In that, if we redirect more energy to mitigation, then we don't have to worry so much about capping it. I'm not saying capping energy is a bad idea. I'm just saying capping is going to probably attract political conflict. So think of the carbon currency as having embodied energy. If it has embodied energy, we want to redirect it towards decarbonisation, and that way we control the carbon budget over the long term. So you can set a hard cap with degrowth, or you can set an indirect cap with carbon rewards and other policies. Keeping in mind that rules 1 and 2 will effectively help limit the supply of fossil fuels and the demand for fossil fuels, because rule 1 is applied to rapidly decarbonize the fossil fuel sector, in the sense it's using the carbon currency to pay to keep fossil fuels in the ground and to transition directly over into renewables. Rule 2 can be used to reduce demand for fossil fuel. And that's very important as a macroeconomic concept, because it's not sufficient simply to reduce the supply of fossil fuels, because that will raise the value of fossil fuels. You have to reduce both, or I recommend we can think about reducing the supply of fossil fuels and the demand for fossil fuels at the same time, and that's done through rules 1 and 2 in a way that could solicit much more cooperation. In the future, I wouldn't discount the possibility of caps coming into play. But the problem is, at this point in human history, I don't think we, as a society, as a global society, are willing to accept hard caps, just from a political perspective. Question 3, what should we do about other environmental and resource problems? For instance, what can be done about biodiversity loss and the overconsumption of other resources? Well, I'll respond to this with a definite statement. The global carbon reward and the carbon pricing table, or carbon pricing matrix, it's very clearly targeted at carbon and the fast carbon cycle. Biodiversity exists in that fast carbon cycle, so it's directly related to the planet's entire biosphere, forests, all life on Earth, because all life is carbon-based. The way it is designed to help prevent biodiversity loss is through Rule 6 primarily. Rule 6 will be used to adjust rewards to help avoid biodiversity loss and ecological damage, and to incentivize further protection of ecosystems, such as the mitigation of pollution, avoided deforestation, and so on and so forth. The application of Rule 1 as well can be used to help protect biodiversity loss, and this is paramount. If you look at Appendix B of the policy working paper, I tried to explain how this is done. The Carbon Exchange Authority is tasked with assessing all of the fossil fuel and energy production around the world and prioritizing which resources geographically should be decarbonized first, or should be targeted with carbon rewards to keep those fossil fuels in the ground. For example, it just makes sense, to me at least, to try and protect the Congolese peat forests and the Amazonia from the adverse impacts of fossil fuel extraction. So if we were to pay to keep those fossil fuels in the ground, it would directly protect the biodiversity in those regions. The same concept can be applied to coal as well as oil and gas. Question 4. These are all questions that came from the audience. How is the carbon currency created, issued, and funded? Well, actual fact, I answered that in part 2. It's also explained in the policy working paper, so there's no reason for me to repeat the answer. Question 5. What is the incentive for private actors to buy the carbon currency when it has no past performance as an investable asset? Well, categorically, it has no past performance history today because it hasn't been implemented. When it's first implemented, the price will be relatively low and the supply will be low. So past performance won't really factor in terribly much. Over time, the supply will increase and the history of past performance will become evident to everybody in the world. So the question is not so much what happens in the past, because that will always be known. What's driving demand is the forward guidance and the promise from central banks to underwrite the floor price. It's, in my opinion, if there is a believable and genuine guarantee from major central banks of the world, it becomes a very desirable asset. Because if you think about it, if it were backed by the European Central Bank, the Bank of the People's Republic of China, Federal Reserve, and the majority of central banks in the world, it's probably the most secure asset on the planet, because it would be backed effectively by all the world's central banks, or the major ones. Ideally, would be all the world's central banks, and I see no reason why that couldn't be the agreement. It makes sense as an agreement because each central bank will be given a certain percentage of carbon currency purchases through a formula that will be designed to spread the inflationary effect of money printing in a way that's most benign around the world. So the concept is to create even monetary inflation across all the world's economies, or the member economies that are actually participating in the policy. So the answer is provided actually in part 2 of the presentation and in the policy paper, and also in the explanations that I've already given. Question 6. If the central banks buy the carbon currency, will this cause monetary inflation? So yes, I've covered this already, but just to reiterate, yes, it will create monetary inflation. However, the idea is that by attracting the private sector to buy the carbon currency as an investment, that will actually avoid the monetary inflation. This idea that the private sector can trade, invest in the carbon currency is vitally important, because this is relating back to the Coase theorem. If we remind ourselves how the Coase theorem is being applied in cap and trade, the idea is that the polluters can reach what they call the Pareto optimum, where they're happy with where they sit in the economy because they've bought more permits or they've sold their permits to find that sweet spot for themselves. This is the same concept that we're applying here by opening up the carbon currency to the world for investment. Essentially, we're seeking that Pareto optimum for investors. This is how we share the mitigation cost across the world economy in a way that is most cooperative. In other words, market actors, investors are happy to invest in it because they're finding that sweet spot for themselves. If the private sector is not buying enough, that's perfectly fine, because that's also what we expect to happen at some point through Coasean bargaining under the Coase theorem. If they're not buying enough, this is where the central banks come in as the buyers of last resort, and they take the cost. And thus it's divested away from the private sector, from citizens, businesses, and governments. That's really key, because if there's no registered cost on anybody's balance sheet other than the central bank, everybody's more likely to be cooperative. Keep in mind how difficult this is going to be in terms of reallocation of resources if we're going to decarbonize at an exponential rate or at a very fast rate. So the monetary inflation itself, how do we deal with it? Well, we need to keep in mind that that monetary inflation, even if it is significant, it's not necessarily a bad thing. It depends on the context. So keep in mind that the monetary inflation, it will mostly manifest later in the century. The current generation probably won't have to deal with it because private investors are likely to buy up the carbon currency in the next few decades, 30, 40, 50 years. Beyond that, it might require significant money printing. The latter half of this century is going to be very challenging and a bit weird, actually, economically, because I don't think we really have a handle on what could play out in the last 50 years or so of this century. Keep in mind, if we don't have continuous steady economic growth because maybe population has peaked or energy consumption is peaking and we're constrained by global warming and other boundaries, that means GDP or the economy might not be growing. And if that's the case, what will we do about the money supply? Because money is created as debt primarily. And if there's not enough money being created as debt, then we could potentially end up with a money shortage, driving a recession or a depression. At least that's a theory, at least. You know, you think about depression in the 1930s. So what I propose is that we have a deeper think about this and consider the possibility that the money created by central banks, which will be debt-free, could actually be just what we need around that time, as the economy is not able to grow as rapidly as it did in the 20th century. Food for thought. Question 7. How does the preventative insurance principle work with the social cost of carbon, which is the negative externality of standard economics? Well, I show the diagram in part 3. They're complementary. So we shouldn't actually compare the preventative insurance principle directly with the social cost of carbon. It's called the risk cost of carbon. That's the new externality, and it's a new type of externality. I described it as a systemic externality. So just to make clear, the difference is a systemic externality, at least the way I define it, is the product of the economic system itself. It's an institutional problem. It's not a problem created by individuals or even markets. It's to do with the monetary system. It's to do with the way the economy is set up inherently. Whereas the social cost of carbon is considered to be the fault of individuals, market actors, and polluters and consumers. That's the Pigouvian theory. Identifying the systemic externality is actually critical to the theory, and it could well be a breakthrough in understanding externalities and the problem of climate change and the market failure in general. Question 7. The answer to this question is, question 8, how does the global carbon reward policy deal with the physical uncertainty of natural carbon sinks and of natural methods of carbon removal? Well, actually, question 8 has 2 parts to it. One is carbon sinks and the global carbon budget, and the other is the project level assessment, measurement, reporting, verification of little projects or big projects. So just talking about the global carbon budget, the carbon sinks, the surface of the Earth, the vegetated surface, is a carbon sink on average. We don't actually have to manage that because that's the Earth's natural response. Okay, but we do need to understand it because how the Earth responds will determine what the available carbon budget is moving forward into the future. So we need to keep an eye on that. And as I explained in part 3, the Carbon Exchange Authority will do just that. They will monitor the carbon budget, the Earth system responses, the positive feedbacks, the tipping elements, and all the risks, both in terms of Earth systems, technologies, and social and political responses. Via that information, they will estimate what the floor price should be, noting that that's the explicit price for carbon removal. So let's come back and think about carbon removal in terms of natural methods. I think it's well known, or it should be well known, that using natural methods is problematic, it's challenging, because forests are not such a great store of carbon if they're subject to environmental stress, such as changes in rainfall pattern, droughts, fires, and so on. Therefore, to address that, we could take two approaches. One approach might be quite harsh and limited, simply by saying, oh, we don't like natural methods, we don't trust it, so we're not going to reward it. I would disagree with that approach. The approach that's being adopted is to take a positive and optimistic outlook and say, well, if you want to use natural methods, do it. Develop the best natural methods you can find. Perhaps you'll make a breakthrough in measurement, reporting, verification, in plant genetics, in nutrient levels, in soil carbon, biochar, you name it. There could be lots of ways to significantly improve biosequestration in the ocean, on the land, and so on. So what we do, the way we manage this is we give each qualifying project a long-term service level agreement. This agreement will stipulate in considerable detail what the measurement, reporting, verification requirements are, and how frequently it'll be done, and the periodicity upon which each individual carbon budget or ledger will be updated. If a project has problems, let's say there's illegal logging or a fire, the updating of their particular carbon budget will drive changes in the rewards. If they go into arrears, for example, there will be a chargeback. We'll take carbon currency off them and pull it back because their carbon's leaked back into the atmosphere. Obviously, that kind of event could send a project into financial illiquidity, or it could go bankrupt. For that reason, we wouldn't necessarily force the money out of them, but we would put conditions on them that they have to recover the carbon over a certain period of time, otherwise they could fall into default. The contractual arrangements will have special provisions for default to deal with situations, force majeure, or whatever, that means the project has failed and it can't recover the carbon. Now, in those situations, all of the defaulted projects and the carbon that's not properly accounted for will be addressed through a negative interest rate charge on all private holdings of carbon currency. And that's the way we resolve the ledger. So it's not something that can't be managed. It's just something that exists as a risk. The idea is that we encourage the market to find solutions, and the approach that's, in my mind, most sensible is to allow people to succeed or fail. If they fail, they don't get the carbon rewards anyway unless they go into default. So the responsibility and most of the financial risk is actually put on the private sector and the projects themselves, and they will have to convince their investors that their technology is going to work. It's a market solution. Question 9, what steps are needed to implement the policy in practice, and how would governments be involved? Our theory of change is to attract funding to do a demonstration of the policy. And in that experience, we would need to attract a few governments to support the demonstration. We want to convince the governments to bring people from their central bank into the demonstration so we can do a desktop review of the policy, interview all the stakeholders. As we're doing this, my hope is that some governments will step forward to actually pilot the policy. So if a government or a private donor or investor sees potential in the policy, they might want to roll out the platform for the carbon currency as soon as possible. Why? Because there's a time issue between reviewing and validating the policy and actually implementing it. So the choice is to roll out the technology later and thus create more delays, or build the technology sooner and then wait for the political environment and the policy discussions to catch up. So that's a choice for the funders, foundations, and the philanthropists who are going to effectively fund the policy development. Once we have the carbon currency being piloted with some decent technology that it can bring the carbon currency into foreign exchange markets through governments and central bank approval, then the policy would be ready for international discussion. Through the demonstration and workshops and conferences, I imagine it will become quite well known as a policy. And then by the time it finds its way into discussions at a COP meeting or within the United Nations framework, by that time, I think more governments and NGOs and citizens will be in a situation that they're willing to discuss this, because they will realize by then that it is an emergency and that we haven't got the scale of finance via more conventional methods, and that this has the scope to actually manage the problem over the long term. At least that's my forecast. It's not proven, of course, the policy. It hasn't yet been demonstrated, but these are my pieces of advice. So it'll be actually implemented as soon as it can be discussed and reasonably well understood by nation states under the UN. Question 10, the world needs to limit greenhouse gas emissions to a certain quantity because we have these carbon budgets. With carbon offsetting, the focus is on the avoided emissions, not the actual carbon budget. So how does the policy address the carbon budget? Well, I've effectively answered that question, but there are two parts to it. First of all, I would agree that carbon offsetting simply doesn't have the leverage we would need to achieve a safe climate. Indeed, it's not really what it's for. Carbon offsetting is more to lower the aggregate cost of mitigation for really the private sector. And it shouldn't really be considered a tool for strong climate mitigation. It's just an option. It has utility. I wouldn't say carbon offsetting is fundamentally flawed. I wouldn't go that far, but it does highlight the various problems, because whenever you have offsetting, the problem is the offsets, the carbon credits, are not 100% reliable. Then it's permitting emissions somewhere else. So you're actually introducing new risks into the climate problem by relying on offsetting. The global carbon reward policy doesn't actually allow any offsetting with its instrument. The instrument is fully funded, therefore there is no offsetting. And this is how we help reduce the risks of mitigating climate change, by providing an alternative to offsetting. So the carbon reward market will exist along with other markets, including carbon markets and offsetting. They simply become choices for market participants. The other point is that the Carbon Exchange Authority, this comes back to the notion of optimal growth, the macro model. The Carbon Exchange Authority is tasked with keeping an eye on the carbon budget. They're going to be watching it very closely, and in response, they're going to massage and modify and adjust rules 1, 2, and 3 and the reward price to try and target a safe carbon budget. That's ultimately the purpose. Now, if we were to rely solely on this reward concept, I would imagine it would still be too difficult of a problem. The point is, if you think of human behavior as emergent, we need to ask ourselves the question, will this facilitate much more cooperation locally, nationally, and internationally? My argument is that there's a very high chance it would do that, because it would bring the middle class, much more people would be involved in climate mitigation, and bring the middle class into favoring mitigation, because they will be active in the investment into mitigation projects by funding them, by buying shares in those companies, and trading the carbon currency through internet applications, and as an option to other forms of investment which might be suffering in the future. For example, if real estate cannot return money to investors, if the stock market's not performing so well, the carbon currency starts to become an attractive option. Also, food for thought, cryptocurrency markets and Bitcoin. In the past year or so, the crypto market in general has become less popular in the mainstream because of corruption and illegal activities. I don't need to explain what's going on. I think you have some idea. So what about those investors in crypto? What are they going to do? Well, they could hang with the crypto market, or maybe they'll realize the carbon currency is actually even a better option than Bitcoin. If money flows out of the crypto market into carbon currency because it's got the central bank guarantee, well, there you go. You have another source of money being put to good use. If you want to know more, if my answers aren't clear enough, have a look at the policy. You can download it from this website. So thank you very much. I hope you found the Q&A session to be enough to answer those questions. If you're not entirely happy, or if you have other questions, just write to us and somebody will respond. Thank you very much. Bye-bye.